Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 28th of January. I'm Caroline Hepke in London.
And I'm Stephen Cowell in Brussels. Coming up today, the US dollar hovers close to 4-year lows as President Trump's indifference fuels further weakness in the currency.
HSBC, Barclays and Standard Chartered joined the UK Prime Minister's trip to woo Beijing.
Plus, with gold at record highs, we report on the Swiss bunker full of bullion that's turning a crypto firm into a precious metals heavyweight.
Let's start with a roundup of our top stories.
The dollar is close to its weakest level in 4 years after suffering its deepest one-day drop since last year's US tariff rollout. The sudden decline came after President Trump said he didn't think the currency had weakened excessively. The president was asked by reporters if he was worried about the currency's drop.
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, I'd want it to be just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
After the US president spoke, the Bloomberg dollar spot index extended losses against all of its major counterparts before steadying in Asian trading. The latest moves come as the greenback had its worst year since 2017 last year.
The dollar's sell-off has been fanned by Trump's unpredictable policymaking, which has rattled overseas allies and investors. The latest slide helped to push the Swiss franc to its highest level since 2015, with both the pound and the euro also hitting multi-year highs. European Central Bank Vice President Luis de Guindos has previously suggested that the euro could become an alternative to the dollar if the EU increases integration. It's a message former European Commission President José Manuel Barroso is also keen to emphasise.
The reality is that the euro remains by far the second most important global currency, much ahead of all the others except the dollar. I think sometimes globally people underestimate the resilience of the European Union and the resilience of the euro.
José Manuel Barroso was speaking to Bloomberg, with President Trump's embrace of the weaker dollar seen as a further deterrent to overseas holders of US assets.
The dollar's recent drop comes despite a rise in government bond yields and expectations that the Fed is poised to pause rate cuts at today's meeting. The president, meanwhile, has long accused other countries of seeking weaker exchange rates to boost exports, saying last year, "I'm the person that likes a strong dollar, but a weak dollar makes you a hell of a lot more money." Goldman Sachs Vice Chair Robert Kaplan says prolonged weakening brings with it a number of dangers for the US economy.
Yes, it is true a weaker dollar boosts exports. However, we have in the United States has 39 trillion of debt on its way to 40 trillion plus. And when you have that much debt, I think stability of the currency probably trumps exports. And so I actually think the U.S. is going to want to see a stable dollar.
Robert Kaplan speaking there as investors have increasingly shifted into gold in what's becoming known as the debasement trade. The price of bullion rose as much as 1.5% today, having jumped 3.4% yesterday to hit a new record high above $5,200 an ounce.
UK Prime Minister Keir Starmer arrives in Beijing today alongside a business delegation that includes several banking executives. Standard Chartered, HSBC and Barclays will all be represented as the Prime Minister tries to deepen trade ties with China. Bloomberg's James Woolcock says there are a number of opportunities in the region.
50 UK company CEOs are going, according to China's Ministry of Commerce, and it wants investment from China, it wants exports. It's worth noting that China currently accounts for roughly 0.2% of foreign direct investment into the UK versus America's 33%.
That was our reporter James Woolcock speaking there ahead of the visit, which comes just days after President Trump threatened Canadian products with 100% tariffs after Canadian Prime Minister Mark Carney's Beijing trip earlier this month. Bloomberg understands that Keir Starmer is aiming to downplay the UK's Chinese imports in a bid to avoid a similar flare-up, which could potentially endanger the US-UK trade agreement.
Some breaking news this hour. ASML has just reported fourth quarter sales and bookings that beat estimates. The Dutch ship equipment maker announced bookings of almost 13.2 billion euros for the quarter. That's versus estimates of almost 6.9 billion. It also sees net sales in the current quarter of up to 8.9 billion euros. That's also above expectations. ASML announcing a new share buyback programme of up to 12 billion euros by the end of 2028.
Sales at LVMH's key fashion unit slumped over the holiday season due to weak demand. The firm revealed yesterday that organic sales in its fashion and leather goods division fell 3% in the fourth quarter. That's more than analysts had expected. The news comes as luxury companies struggle to bounce back from a slowdown that followed the post-pandemic boom as cost of living pressures and geopolitical uncertainty weigh on spending. LVMH CEO Bernard Arnault said the group faces a difficult environment in 2026 and that it will limit spending this year. So those are our top stories for you this morning. Let's take you through the markets. The dollar saw an aggressive sell-off on Tuesday. It rebounds on the Bloomberg dollar spot index 0.2%. The euro also reversing the gains that we saw yesterday. So it's down by 0.4%, 119.96. Same story for sterling. Risk reversals for the dollar, though, also do seem to signal further weakness for the dollar still to come. The worry about that, of course, whether that imports inflation into the United States. 10-year Treasury yields easing a basis point to 4.23. Jerome Powell's first press conference today since the Fed was served with those grand jury subpoenas. So that is one definitely for markets to watch as we see stock futures jumping. Euro Stoxx 50 futures are up by 0.5%. Stephen?
In a moment, we'll bring you more on the pressure on the dollar, plus how a crypto giant has quietly become one of the biggest players in the booming gold market. But we've also been reading the latest this morning from our colleagues over at Bloomberg Opinion on artificial intelligence. Alison Traeger takes on Elon Musk's recent prediction that AI will create such abundance that in a decade or two, people won't need to bother saving for retirement. Alison's take, don't count on it. She outlines two probable scenarios for AI's future. The first is that it is like other big innovations, makes people more productive. We see a modest increase in growth over time, not enough for you to forgo your pension just yet. But the second optimistic and likely scenario, she says, is that AI is not like past innovations. It'll transform lives like nothing before. And that could be different because it has the potential to change the speed of innovation because the technology can actually innovate by itself.
Right.
Now, all of this put together would mean that, you know, innovation is great, but for example, if it makes us live longer, we're still going to need people to look after us when we're older, because we know that socialization is such an important part to living a good life. AI can't provide that. So we're going to need to pay for it. It's probably going to cost more, and thus you're going to need your pension. Now, these are the optimistic scenarios. Other scenarios included, I mean, it could just kill us all, in which case then you don't need a pension.
Yeah, I'm not. Is that what Elon Musk meant? I mean, yes, I think that's very interesting. Look, Elon Musk is just absolutely fascinating, isn't he? And I like the fact that it's optimistic, but no, I don't think that I'm going to stop saving for retirement under this sort of under the current conditions anyway. And also, I note that, you know, what if AI comes along and actually there are far fewer jobs and we all need something to live on? Universal minimum wage. I mean, does it bring that argument back? I don't know. Interesting story though.
Yeah, plenty more to read. Bloomberg.com/opinion. Well, let's bring you more now on the pressure on the US dollar. Part of the debasement trade playing out on markets that's seen investors offload major sovereign debt and currencies for fear that they're being devalued. Bloomberg Opinion columnist Shuli Wren has been writing about this, and she joins us now for more. Shuli, great to talk to you. Donald Trump says he's not worried about a weaker dollar. Should he be?
I think Trump needs to be a little bit more careful with what he's saying. I mean, he always wants a weak dollar because U.S. goods is very expensive, and U.S. is very expensive for wealthy tourists from Europe or Japan. But the problem is when we start to see such a clear trend of dollar weakening, international investors will have even more incentive to sell U.S.-based assets. Talking about euro, right? For investors that are based in the European Union, if they bought into the S&P 500 in the last year, they're euro-based returns is actually none because the euro has just strengthened so much against the greenback. So going forward in 2026, say the dollar is going to weaken another, 5, 6, 7% against the Chinese yuan or the Japanese yen, that is going to be a big problem. The Asian investors will also want to start to sell America.
Okay. You've also been writing about why this whole idea, the debasement trade, should be a bigger worry for the US Treasury Secretary, Scott Bessent. What does this mean for US government borrowing if you have a weaker dollar?
Well, the U.S. government has a lot of deficit to finance every year. This year, we're looking at somewhere around $2 trillion. But the debasement trade, the central thesis of debasement trade is basically saying that, global investors should offload some of their holdings in sovereign bonds. And instead, maybe they should look into precious metals like gold, silver, or some even looking at crypto, right? So like when the global demand for U.S. treasuries, say, weakens, even domestically, like maybe it's possible American households want to hold less bonds and more gold, then it's a big problem for Scott Bessent because he's going to rely more on short-term T-bills and he has to worry about rising borrowing costs.
How much further could this trade go then, Julie? Is it putting the reserve status of the dollar in question?
To be honest, at the current gold price, global central banks' gold reserves are already more. They already have bigger gold reserves than treasury reserves. So, in fact, de facto, we have already moved to a gold standard. And unfortunately, the issue with the foreign reserves is that if a central bank feels like, okay, I'm investing in the euro or gold and they're serving me very well, I'm going to keep on investing in them and sell my treasury reserves. So I think the U.S. government does need to be very careful because there is already a sense that the dollar is no longer the reserve currency.
Wow, interesting. Shuli, thank you so much for being with us. Our Bloomberg opinion columnist, Shuli Ren. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
The crypto giant Tether Holdings has quietly become the world's largest known hoarder of gold bullion outside of banks and nation states, and it's shaking up the gold market. Joining us now for more on this story, our precious metals and mining reporter Jack Ryan. Jack, good to have you on. Then remind us, who are Tether and what are they up to in the gold market?
Tether are one of the most interesting companies in the crypto world. They basically issue this dollar stable coin, and in return for that, investors give them real dollars, which they can then invest in things like gold and Bitcoin and treasuries. And that's made them immensely profitable. And a lot of that money they've been pouring into gold bullion. So they've been buying 1 to 2 tons of gold a week, which makes them really one of the biggest buyers of gold in the market. The second biggest buyer of any, for example, central bank that we know would be Tether. And so there's very actually little known about why they were buying gold or how much they planned to continue buying. And so in our story, we kind of lay out some of those things.
Has it had an impact then on the rally that we've seen in gold, given, just the heft of this company now?
Yes, so they bought more than 70 tons last year, which definitely would have been enough to have an impact on the price. Not maybe, the lion's share of gold, 65% rally last year. But I think from talking to a few experts in the market, they estimated that definitely a few percentage points of that you could attribute to a buyer of that size. So they definitely had an impact, but only one of many, many reasons why gold has been surging over the last year.
One of the most fascinating parts of this story is how Tether is storing the gold. Tell us more about it and what do they want to do with it?
Yes, it's a converted old nuclear bunker in Switzerland. Tether have a massive emphasis on keeping a hold of their gold themselves. Like a lot of people, I think, in the crypto world, they, are maybe skeptical about government debt. They have a great emphasis on kind of keeping physical possession of their own assets. So gold is a kind of naturally appealing asset for people in that world. So because of that, often central banks would store their gold with the Bank of England or something like that. Investors would maybe store it with commercial banks in London. Tether has been buying physical gold from refiners, big banks, and essentially shipping it to its own massive vault in Switzerland. And actually now is looking at maybe trading some of that gold to kind of make active use of it and take advantage of arbitrages, spreads. And to that end, they've actually hired two of the most senior bullion traders from HSBC, which is one of the biggest bullion banks in the industry.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.